Welcome to the Rental Realm podcast. Today I'm sitting down with Matt Floyd, co-founder of Stay Classy Homes here in San Diego. Matt's been in the short-term rental game since 2019, and his journey is pretty wild. He started the company literally right before COVID hit. We're talking signed leases in January 2020, launched in March, and then lost $60,000 in bookings in a single week when the pandemic struck. Most people would have called it quits, but Matt and his partner Craig hustled through it and came out on the other stride much stronger. Fast forward to today, they're managing about 80 units across San Diego, Nashville, Phoenix, and Hawaii. But here's what really caught my attention. They have 175 five-star reviews on Google. Not a single bad review. That's insane for a management company at that scale. And if you manage, it's really hard to get that sort of statistic. In the past year alone, they've tripled their portfolio through strategic acquisitions and finally cracked the code on consistent lead generation. Matt's also super active in our STR community. He hosts weekly meetup calls and is always sharing knowledge. We're going to dive deep into how he grew from 25 units to 80 in just 1 year, the ins and outs of buying other management companies, and what it really takes to deliver exceptional quality at scale. Let's get into it. Welcome to the Rental Realm podcast. Today, I'm joined by Matt Floyd. How's it going, man?
Good to see you, brother. Excited to be here.
Yeah, well, Matt's in San Diego, so came right down the street. It's very convenient. But I met Matt, I think it's been a couple of years, but for just over maybe a year and a half. Maybe we met like around last summer.
Been at the conference, Patrick's conference. And
STR
Nation.
I was trying to figure out because before the day I was like, I think because we spent a lot of time together right after that. I think you have a meetup, and then we got connected in the same groups and everything like that. But I always see that in my head as like the time of my life that I started to get really involved in the STR space in the community, because before that it was just like me and Sam, and we didn't want anything to do with anyone else in the in the market that we were operating in. So I've been definitely inspired by a lot of the work that you've been doing, just bringing everybody together. Like, I think what you're doing, contributing a lot to just general short-term rentals, operators, and just like providing a lot of value without asking for anything back. It's what I've observed over the time that I've known you. So appreciate that. But I'll let you do a little bit of intro. I know you have quite the portfolio in many different units or many different markets, rather. So. Yeah, if you want to just like give everybody a little intro on yourself, we can kind of get to it.
Sounds good, brother. Yeah. Man, I'm from Wisconsin, moved out here probably 7-8 years ago, but I've lived all over the place, and I'm a user of Airbnb as much as I am a manager. Now that's kind of the full-time job, but lived in Spain, lived in the Caribbean, in St. Martin, lived in Boston for a while. So my wife and I love to travel, and so I think that's kind of why we're passionate about the industry as a whole. We love traveling. We love being able to stay in a place that is not a hotel room, where you actually feel like you're in the neighborhood and you have the neighbors in there you can say hi to. It's just a really cool feeling. So used Airbnb well before we ever managed properties. And we just got started. We were investing in our own properties. I was working W-2, trying to figure out how to, have a little flexibility in life, get some passive income coming in. Was going to a bunch of real estate meetups, which is where I got the idea to start our own meetup. Yeah. So we learned a ton. We made a lot of connections and friends, and that's actually where I met my business partner, Craig. And he taught me everything I know about vacation rentals. He was buying about Nashville and was showing me the numbers, and he was open about everything. Here's how much it costs me to run it. Here's how much the cleaning is. Here's how much I'm making. And I was like, blown away by the concept and how fun it looked to have these really fun places to stay and host other guests coming in and make some profit on the back end. So that's how we got started in it. I was buying some places, he was buying some places. We were furnishing them, building all the furniture ourselves, painting everything ourselves, doing all the work. And we were hustling, right? It was a really fun time, and just taking whatever extra income we had from our jobs, putting it in there. That organically turned into some friends and family wanting to do the same, and they asked us to, if we could manage for them. And so the company grew organically out of that. where Craig and I own our properties separately. We created the management company to manage our properties, and then some of these other ones that were coming in. We started doing some arbitrages here in San Diego. That's how we started the company. I know you guys are doing that as well. And it was a great strategy when we started. The rents were lower. The income during COVID was great. That was during 2020 when we really got up and running. Funny story, we created the LLC in December 2019. We negotiated the leases January 2020. We got all the furniture set up in February 2020. We opened the calendars starting in March. COVID hit March 20th? I'll never forget the day, March 19th to 20th, 2020. And we lost $60,000 at bookings in a week. And we thought that was the fastest business failure ever. So we thought we were going under that quickly. But we made it work. We got some midterm guests in there. We made it through that really tough part during the lockdowns. And then all of a sudden, everything exploded. People were working from home. They were able to work from wherever they wanted to be and travel. And we made it through, and we got to, we got the benefits of hustling through that period. Fast forward to today, we have about 80 units under management, mostly in San Diego is our hub. We have some in Nashville still, some in Phoenix, where we also own, some out in Hawaii through an acquisition we did. But the main hub is here in San Diego, and we're growing like crazy. We finally figured it out.
Yeah, that's sweet. Crazy story too. I think like I heard something I think last year I heard a statistic of like half of all Airbnb hosts or short-term rental hosts started within the last like year or two, something like that, which I'm sure is still true this year about the previous, because there's just so many hosts out there in general, so many operators. So it's cool to hear that you've been in it for now. I mean, thinking back on it, like when I think of like COVID and that whole era, it feels like it was yesterday.
Yeah.
But yeah, to say it was like over 5 years ago, it's just wild. And I think you're one of the first people on the podcast who's like really gone through that actual transition. Most people that I have on here, like, oh, I started right after. Cause it was also like a strategy like during COVID that started to get coached and look more popularized for people to make passive income, people that were out of job or holders who didn't have the opportunity to fill their units for whatever reason. So for them to maximize their rental income. And for us, like that's when we recognized it was middle of 2020. And like we were doing fine, just like you, Craig, like we were at our W-2 job, just like, whatever. And we didn't own any properties at that time. But then like just one random article came by and I looked at it and I was like, that seems really easy to get into. And rental arbitrage that was the option for me. So started, ours was 2021, March of 2020. But it was still kind of like a time where like there was like a spike in COVID. Like I'm still kind of lingering.
Oh yeah.
People got really worried about it again in early 2021.
Oh, that's right.
It was weird. And so I think like the owner that we worked with, he's actually like, he owned a full, like, it was like 12 unit complex. He was just looking to fill one unit, but it had been vacant for like months, like 2 months or so. And we're like, oh, we'll come in right now. And we got you like, well, we're going to furnish it and just rent it out. And he was a lawyer and he looked at our papers and he was like, we'll edit these a little bit, but it looks good. It makes sense. I trust you guys. So that was cool. That was like a nice reassurance at that point. But yeah, the same thing is like, once you, like back then starting with that model, like for us, we were so freaking desperate. We were like, we'll take whatever it is, like whatever you want to get out. It's like, we're pretty sure we can make more than what the rent's going to be, no matter what you say. Like $3,000 for one bedroom with a part. Sure. Let's do it. Like, we got rid of some of those units because of that. Over time, it just became more difficult. But yeah, anyway, you really diversified in general, like into a lot of different markets, which was cool.
Yeah. I mean, to your point, I think it's important, like if people are listening and they're like, how do I get started? Right. I mean, we can talk about what's the scale look like at 50 or 75 or 80. Right. But most people are going to be like, hey, how do I get that first one? And I think that I'd love to hear, I mean, that's great to hear your story on it too. We were like, we want to jump in. We want to get into this. We had saved up a little bit of money, so we were allocated towards the furniture. So we were going to buy the furniture with that. And we were like, all right, now how do we go and get a lease? Right. And so we were just like, all right, well, let's make some phone calls and ask, and we had a little bit of a pitch. And we just said, hey, here's who we are. We're stand-up guys. Here's what we're looking to do. We're looking to rent it. And then we'll re-rent it, corporate travelers, vacationers coming in. your insurance claims, whatever it is, and we will make sure it's cleaned on a regular basis. You can come in and take a look and inspect it anytime you want. We're going to furnish it. It's in our best interest to keep the property in as good a condition as possible, so our interests are aligned. So, all those things we had to think through. What are all the potential objectives? How do we handle those? And then how do we make it so that it is a really good deal for them? They're going to get paid every single month, regardless of what we make. And so you really kind of have to hustle and put yourself on the line to say, I'm going to use my reputation to get these, to get the first few. And then you really have to figure it out and say, I know I got to owe this rent. I know it's my responsibility to pay this rent every month. Now I need to figure out how to operate my business the best I can to make the difference. But if we fall short, like we did in COVID, we had to make up the difference.
Yeah.
That's what we committed to when we signed those leases. And when we came out of COVID, those owners were so happy with us because we never skipped rent and continued paying.
Yeah.
We renewed the lease for another 3 years, right? Like they didn't want to do another year. They did 3 years.
That's cool.
Right. So that's where it's like, and to that point, when we made those phone calls to try to, we were like, oh, well, we'll probably have to make a ton of calls. We made calls within the first week. We got the 3 leases. It's not nearly as hard as you think. In your head, it seems so much more difficult. And then you go take the action and all of a sudden it comes to fruition.
Yeah. And like, if you think about it too, it's a very different conversation going to somebody with no experience, asking them if you can do rental arbitrage versus trying to partner with them and them knowing that you haven't done this before.
Exactly.
Which is why that's like rental arbitrage is always such a good stepping stone to get to like the full management potential.
Good point.
Strategy. Cause it's like the worst, like you're locking into a 12-month lease. The worst that can happen is like you have to pay them the termination fee or everything like that. Like I'm sure they checked your credit. They had discussions with you guys, and it just makes sense from like an owner perspective. Like for that, it's minimal risk. I mean,
agreed.
How many units do you have now?
Arbitrage or regular? We have 2 arbitrage left, and they're kind of fading just because rents have gone up so much. But we have about 80 now in the portfolio, and probably 50 to probably 60 of those are in San Diego now, as we've consolidated and focused. And the reason why we focused in is a good point, because we still have some in other areas, but we've gotten away from growing in those areas. And over time, we kind of have attrition that naturally they'll come back down. It's because we realized that we couldn't get to the quality level that we really wanted to get to unless we had enough volume in one location that we can hire on the ground staff, right? So now we have full-time maintenance. Now we have full-time director of operations. Now we have full-time sales guy locally. So, and then myself and Craig. So we have 5 people locally that are boots on the ground that can go to properties as needed when there's emergencies that come up, or, to do walkthroughs, to get new clients in. And that's pushing our quality level up higher and higher with those properties. So we have a virtual team as well. The combination of the virtual team and the on-site team is really how we want to be the best quality operators in San Diego. That's how we're going to get there.
Yeah. Stay Classy Homes. I love the name. 80 units. And I also looked at your website this morning. I just Googled Stay Classy Homes San Diego. You have 175 5-star Google reviews, all 5 stars, which is insane. I did a double take when I saw that, because most management companies are going to have some pretty bad ones in there of angry guests that go in there and they're like, this is awful. But they're calling you guys out by name, like, Matt and Craig were the best hosts ever. They're so professional. They let me check in early. I stayed in an amazing property. I had everything I needed. Like, I was reading through those reviews, like, damn, that's in itself. That's one of those like qualitative results that you can't really describe.
Yeah.
And that, like, everyone's going to say that they give good quality to their guests and all those things, but like, to do that at scale at 80 units is pretty insane. So
yeah, I appreciate it, man. I mean, we've worked hard. We've definitely worked hard. I mean, there's no doubt that along the way you have bumps and you make mistakes, and some guests don't have the experience that they want to. But I think that's the goal, is always to try to figure out why that is. How can we change our systems and processes so that the guest experience is as consistent and positive as possible? And it's really cool to see those reviews coming through, right? And I think as business owners, a lot of times we see the bad ones. When you see anything that's negative and you really focus in and say, why did that happen? How do we fix it? How do we make sure it doesn't happen? And sometimes the all the good ones go by because we just expect them all to be good.
Yeah.
Sometimes it's really nice to go back and look at all the good reviews and realize how many people are having amazing stays with us. And it's really rewarding because I love traveling as well.
Yeah, that's super cool. And Google is like, it's a hard one to get reviews on, Google and Yelp.
Yes.
Like people will always like it. It's as small as like just like neighbors that are upset, or like somebody
Yep.
that you, I don't know, just found out they're doing short-term rentals and it is against it for some reason.
Yep.
It has happened to us, and luckily, like you can usually get those ones removed because they didn't actually experience your service. You know,
Good point. Yeah.
else out there. But
Yeah.
yeah, no, that's super cool. So I want to talk about like how you went from 0 to 80, because like skipping from 2020 to now is it's a long period of time. So like if you could compile like your most significant events from 2020 to 25, like how you got to 80 units, how would you describe that?
Yeah, let me see where to start. So we had our home, right, that we were managing, and then we had a few friends and family and some referrals from realtors that were coming in, and we kind of got up to about 20 to 25 between the arbitrages, the ones we owned and the ones we managed. And it was a mix of all of those. And we kind of hit a ceiling there. The market shifted, the interest rates went up, our referral sources kind of, disappeared. And we were stuck. Now we had already quit our W-2 jobs about 2.5 years ago. That would have been 2023 in April when we quit our jobs, and we held each other accountable to doing that together. We hired our virtual assistants to help us out prior to that. So we said, we're going to quit our jobs. Let's hire a team. Let's figure out how to scale this and grow it. So we had the team, the operations was ready to go. We had solidified the operations. We were ready to grow. Now we really had our bottleneck came when we just couldn't. We were really struggling to find ways to get new clients in the door. We were trying everything. I was calling realtors with properties on the market. We were doing door knocking to realtors in La Jolla and some other areas. And we bought chocolates and we got laminated, like referral things that we could drop off with them.
Yeah.
And we were so excited, and we did get a few leads immediately from walking around, and people respected that. We dropped off a lot of chocolates. People appreciated that. And we dropped off the laminated ones. We just weren't getting a solid flow of leads. We were trying to create that. And so by telling that story, I'm just trying to explain that we tried and failed at a lot of different strategies to try to figure out how to get leads in the door, the consistent leads in the door. We were building our SEO, we were building the website, but that's a multi-year process like you saw with Google ads. That's taken years to get there. So a year ago, this time, 1 year ago, we were at about 25 to 30. Now we're at 80, right? So what happened in the past year? We did a couple of things that we broke through on. Number one was acquisitions. I talked to a couple of friends. Shout out to Patrick Switek, if you're listening in on this. He really helped show us the way of you can go out and reach out to other people that are operating, whether it's realtors or other smaller managers, and just ask them and say, hey, we're looking to grow. We're looking to grow through acquisition. We're willing to pay you for your contracts. Are you interested? And we bought one company that was on the market for sale. It was a portion of a much larger company. And then we did 2 acquisitions. That was one of them. That was the Hawaii properties. It was a totally new market, new regulations, new laws, new business license. We had a lot of work that we had to do out in Hawaii to make that work. The cool thing was that we bought a portion of properties from a much larger company, and we got to know the owners of that company through the negotiations. And they helped us through their advice. They kind of mentored us at the same time, helped us to improve our operations, improve our profitability, improve our systems, because they were at 300 and we were at 30.
Yeah.
Right. So I learned a lot in that process. We did another acquisition here closer in San Diego. They were looking to get out. They had just they were feeling burnt out from it. And they, said, great, if we can get money for the contracts, we'll sell it to you guys. We'll help you with the transition with the owners. And that was a win-win for us and for them. So that was another bundle of properties, probably about 18. So it's about 15 in the first one, 18 on the second one. And, so you do the math on that, it's about 33 or 35 or so that we acquired there. Big process, a lot of work that went into that, and we learned a ton. about how to improve our own business in the process. That's the first main reason why we grew. The second one is we really did crack the code on how to get a steady flow of inbound leads coming in through our marketing efforts, paid marketing and SEO, and how to do outbound outreach and look for reasons why somebody might be in concern with their current managers and see if we can bring them around to go with us instead.
Right.
And we've gotten really good at that as well. So the combination of inbound through paid marketing, outbound outreach, and acquisitions is how we tripled this company in the past year.
Yeah. Do you think that there's an advantage? I know there's a lot of advantages in general to obviously acquiring a new company, pulling it into your portfolio. But do you think like you skip a lot of the work that needs to be done to like set up all of your operations properly? Like, I guess my question is like, do you feel like kind of had to start from scratch with some of these because you've acquired multiple companies now? Or did you feel like it was kind of like more or less a turnkey type deal where like now you get all their resources, all the data is really well documented. I imagine if they're not doing that well and they're looking to sell off the company, they probably don't have the best systems. But what has your experience been with that?
Yeah, no, it's a really good point. I think there's so many unexpected things that happened throughout this. With both acquisitions, we along with the contracts, we got employees that came along with it, right? In the first one, we got a full-time employee that came along with it. And to tell you the truth, she wasn't really doing that much for them. I think or at least what her role was with them was different than what we would have expected, right? So we brought her on, very nice person, but we started giving her expectations on what we needed to see for results and KPIs. And pretty quickly, I think she realized like, hey, this is going to be more work than what it was prior. It's not quite as easy. And so she took herself out of the equation and just said, hey, no, I'm good. Appreciate everything you guys, we'll leave on good terms.
Yeah.
Now, we didn't end up backfilling for that role. We didn't feel like we needed it in the first place because we had a good virtual team. The sellers really, really felt like we needed them. We needed her. And they're more traditional. They've been around for decades. So it's just a little bit of a different philosophy on how we can handle things remotely versus on site. And that saved us her salary. We saved that amount, and we were able to hire one more virtual team member that did basically the same amount of work.
Yeah.
And saved, made a good margin there. So that was the first acquisition. The second one came along with a VA, virtual assistant, and a full-time maintenance person. And we've got both of them, and they've both been fantastic. So the VA just rolled right in with our team.
Nice.
And gives us some more capacity there. The full-time maintenance guy, he's the full-time W-2 with us. His wife does like a lot of cleaning for our properties, and he's our full-time maintenance guy. So we provide for their family and their kids, which is a big responsibility. And we're very grateful. It's a really good partnership, but we're very grateful that he came along with that. So to your point, the VA knew all the properties, knew a lot of the owners. The maintenance guy knew all the properties, knew exactly how everything should run. So bringing those properties on board with that staff was very easy for us because we brought the staff that have the knowledge. Now, the hard part is with the owners, making sure that they're very comfortable with the transition. And we learned a lot in that process. How do you communicate? How often do you communicate? And when do you have touch points? Do you do walkthroughs? How do you make it so that they're really comfortable with the how do you make it so that they're confident in what they're coming into and all the benefits that they're going to see with us that they might not have had before? And the seller also is going to help with that conversation, because the way the contract is written for the acquisition, if those contracts are dropping off quickly, or if certain owners are dropping off quickly, then the value of the overall purchase comes down, right? And I think the reason why it's set up that way is because we don't necessarily know all the owners, right? You don't get a chance to get to know them ahead of time. You don't get a chance to know whether, hey, is the property for sale? Are they thinking about putting it for sale? So that's a contingency that's put in really often to make sure that, hey, we're aligned here. We're all sides are going to do the best they can to make the transitions.
What is it? Just some periods? Usually, is it like a few months?
It's negotiable in both instances. The first one was a year. The second one was kind of the duration of the contract. But there's language in there that says, hey, depending on who was at fault, I guess, if you want to look at it that way, which can be a little subjective. But I'd say 6 months to a year is a good time frame to basically say, okay, if something drops off in this time frame, we really hardly got up and running.
Yeah.
If something drops off after this point, then it's more on us.
Sure.
So a little bit subjective there, but we haven't had the issues with it.
Yeah.
Yeah.
What do you look for when you're targeting these markets to buy?
Yeah, that's a good question. I mean, we're looking for contract strength. So we're looking at how long is the term of the contract? Is it month to month or is it annual? Annual, obviously, it's a much stickier contract and you have a good amount of runway to get up and running with the owners and get them comfortable with you before that contract renews. If it's month to month, then they're not happy with how going to a new company, they could drop it right away. So a contract length is important. Assignability clause in the contract is important so that we don't have to get them to re-sign a contract right away. And we can just continue with the existing contract if they're earn their trust to show them we know what we're doing and then get the contract down the road. The quality of the properties is big. The first one was condos in Hawaii, condos and homes. Those make twice as much as condos and homes in San Diego, right? So the revenue per property is an important one for sure. Revenue per property, regulations, we're kind of keeping an eye on that, what the risk looks like for regulation and why there's some risk there. What else? Yeah, those are the ones I can think of off the top of my head.
What are some red flags that you would say like, heck no, I'm not going to do that?
If they're all low dollar properties, right? Like if they're really small properties, then you end up with a lot more operational work without a lot of margin, right? So I think at some point, as you continue to grow, your standard for what your minimum property and minimum revenue looks like goes up. And that's just because a 4-bedroom property in a lot of cases can be the same amount of work as a 2-bedroom property, but your margins on a 4-bedroom are much higher, sure, because you have more ability to make revenue. So yeah, that would be one. Yeah, that's one as well.
The biggest one. Yeah, makes sense. And how do you buy these? Do you get a loan? I mean, I assume you've been getting loans. Do you ever like seller finance? Is that like your primary strategy?
Both were seller financed, and I think it's a unique opportunity when you're talking to another business owner because in a lot of cases they built it from the ground up, like you did, like me did, right? You start with one and you build it up to a certain scale, and then you decide, okay, do I continue growing? Do I continue scaling and hiring more people? There's that inflection point. The acquisitions we did, they built from the ground up, so they had no debt really, and it was more of a kind of a conversation to say, we don't really want to go and get an SBA loan. We don't want to go through that process of having to go through the underwriting for SBA. We're only interested really in the seller financing because it aligns our interests, and we don't have to take on the bigger debt. And with the contingency process, the contingency period, you're kind of doing somewhat of a seller financing anyway. So it made sense naturally. And in the first case, I think we did 70% seller financing. The second case, we did 66% seller financing. And then for the cash portion that we had to come up with, we could have come out of our own pockets to pay for the cash amount. But we said, hey, we have a business here. Let's use what our business has created. Let's use the P&L statement of the business to get credit with our banks. And so we went, I should watch Credit Stacking. Jack McCall is a really good influencer in credit stacking. And he is teaching about how do you use your business to get lines of credit that open up flexibility with your cash flow and with your ability to grow, hire whatever it is that you want to do. So we went to our bank, we switched banks, and the contingency of going to Chase, JP Morgan Chase, was we want $100,000 line of credit with you guys. And so that was a contingency for us to switch over to them. So, the banks will do that if you have enough revenue coming through. Then we had QuickBooks and they gave us a line of credit. PayPal gave us a line of credit. Guesty, our software will give you a line of credit.
Totally.
Yep. You got to pay it back over time, and Amex. So we were using all these banks, so we were using all these tools, and they're all offering lines of credit at different interest rates. So we looked at what the best rates were. We maximized those. We used that money to pay for the down payments for these acquisitions. And then our goal was we want to pay those off as quickly as we can.
Right.
Because the faster we pay them off, the more margin we get, the less risk our business has, and we can take that margin and actually pay ourselves. We didn't pay ourselves for the first 4 or 5 years of running the business.
Yeah.
So now we're finally able to pay ourselves.
That's great. Well, yeah, you guys put yourself in a good position for sure. Because I think, like, I guess we started paying ourselves after the first 9 months. Because like we put our jobs and we're like, let's go fully into it.
I love it. So quick.
So yeah, because like we just hated our jobs so much. We just knew we had to get out of it. So, I mean, I think
motivator.
Obviously, if we stuck around longer, we would have been in a better position to like just have more cash to start investing.
Sure.
More deals, but we took on loans and have like slowly paid them off over time. So we've done the same thing. Like we've gotten loans from QuickBooks, Chase, Stripe. We got one from too.
Okay.
Recently. That one was really helpful for our truck contracts.
Yep.
But yeah, same deal. Like it makes sense. And a lot of times, like for Chase, I know we had like a relatively low interest payback for like 5 years. It's a 5-year loan. So it was just like we can slowly pay this back over time. It's fine.
That's amazing. I got to ask you more about that one.
Yeah. Yeah, no, it's good. That's sweet. Okay. So,
and I think it's important to know as well, like the reason we felt like we were confident that we could, I think the thing is like, I wouldn't recommend to somebody say, hey, I want to go start a business. Let me get a whole bunch of lines of credit at interest rates. It's kind of like putting money on a credit card. Like if you don't have a strategy and a plan and a really strong understanding of what you're doing, that you know you can actually succeed and pay those back, I wouldn't recommend it. We have been doing it for 3 or 4 years, and we had a consistent basis. We had the operations team in place. We knew we could double in size and handle that volume, and that's what gave us the confidence to say, okay, let's go solve this growth problem because the operations is solid. Let's go take out this loan, put it in here because we're confident we can actually execute on strategy.
Mm-hmm.
Yeah.
Is there like a sweet spot of portfolio size that you've been looking for that you feel is like the best return for you?
Not really. I mean, it's when we did the first acquisition, we were at 25 or 30. So I figured we can't, like going after another 30 or 50 would be too big. It was more than double, and it would really like blow up all of our systems. So at that time, I was looking for maybe 10 to 20, and that's about the range that we did it in. Now that we're up to 80, I think that opens the door up for a lot more capacities. So we could do 40 or 50 at once. We would just have to be really dialed in what that communication strategy was going to be and which team members were going to have what responsibilities. But yeah.
So if you were to put into a short answer for anyone who's maybe like scaling in sort of that like small and medium size shark and business, why they should consider company acquisitions versus slowly acquiring over time, how would you explain that to somebody?
Man, there's so many benefits that I didn't expect to happen through the acquisitions. Number one, when we started looking at the acquisitions and you say, hey, I'm looking to acquire, and somebody says, hey, I'm looking to sell, you get all of their financials. You get to see their P&L statements or, the financials for those properties at least. You can see the contracts. You get to see everything, the expenses. And through that process, I evaluated probably 10 companies, and I learned something new about how to run my business better every single time. So even if you're not going to close on an acquisition, you can still, kind of say, hey, I'm interested in it. Gather the financials. You're under NDA, so you can't share it with everybody, but you learn better about how to run your own business, how to get better margins. Why is my expense up here and theirs is down here? Why are my expenses so high in this area? So I learned how to run my business better. We got to hire great employees without having to like find them and source them and vet them out. And they were turnkey. They already were involved. We got to gain a volume of properties all at once in a new market, instead of trying to build one by one and have no credibility in a new market, it's really hard to sell and to get new clients in when you have 0 or 1 property. If I have 12 properties, now they're saying, oh, great, you already know what you're doing. You got your systems down. It's much easier to grow when you have a solid basis. It's also much easier to hire staff when you have a basis of, when you're coming in with a basis and you're coming in with enough margin to potentially hire. And that allows you to get your quality up really quick, right? As opposed to going one by one, you're really kind of strapped for cash and trying to grow and hustle your way there. It allows you to jump forward. Another unintended consequence that I didn't expect was that the owners, oh, you're good. The owners who were kind of high maintenance owners, right? Or properties that were really not good properties. If you get 20, if you acquire 20, there's going to be a group of those owners who are really high maintenance, and there's going to be a group of those properties that are not the best condition. What naturally happened that I didn't expect is that, as smooth as we tried to make that process, some of the owners weren't happy with the transition and the fact that they did get a say in it, right? We bought the contracts, they assigned them over, we became the new managers. Those owners who weren't, felt like they were out of control and we couldn't get them to be comfortable with us, they dropped off relatively quickly. Now, what ended up happening is the high maintenance owners dropped, and we got to keep the good owners and the good properties. So we didn't know which ones those were going in. They did that for us, right? The owners kind of created that for us. So we ended up with good properties and good owners, and, didn't end up having to pay for those really high maintenance owners, right?
Yeah.
So it was an unintended benefit that we didn't expect up front.
Were you able to exceed the monthly payout to the owners, and then would they now just like, wow, this is awesome, that's way better than the previous man?
That's a really great question, and that's another thing I was thinking about earlier. In the acquisition process, we looked at the listings, we looked at the properties, we looked at the reviews. We wanted to see, is there opportunity? Do we think there's opportunity for us to improve marketing, to improve revenue? And in both cases, we did really feel like we could. The main reason was that both companies were operating mainly on VRBO, right? We operate mainly on Airbnb. Now, we also operate on VRBO and Booking.com, and we tried to get as many eyeballs on the properties as possible to get the best rate for the owners. But neither of those companies were optimizing Airbnb, which is the biggest in the US. It's the biggest company. So we felt like we could optimize for Airbnb, continue to operate on VRBO, continue and add a couple other booking platforms, and we could get a lot more demand coming through because we're very good at optimizing for Airbnb specifically. Also, the reviews out of Hawaii were around 4.6, 4.7, and we know that there's a 25% revenue differential between a 4.6 and a 4.9, 25 to 30%, just roughly in that range. So if we refresh these listings, start with 0, and we keep it in that 4.9, 4.8, 4.9 range, we're automatically going to do about 25% better. That was our expectation. Now that we've been in about a year, I actually went back recently and looked at how we were trending now that we're coming up on the year mark. And we're consistently about 15 to 20 to 25% higher gross revenue than what the prior company was doing. And that's a really great thing to see. And it's really validating because you want to do well for the owners and you want to show them, hey, we know what we're doing and we really can do this in a good way. And to see that come to fruition, it really makes me feel good about what I've been able to do for those owners and how much we've hustled to try to make it work for them. Some of the owners are still, it's funny, some of them are really challenging. I say, you're the new guys. What can you do? Hey, where's our revenue? And we're like, hey, we're doing way better than what you were doing last year. But it's perception.
I would only expect that too. Like your company coming in with being listed on Birdo is crazy, but that's just kind of like the reality of some of the older companies that haven't really adjusted to the new environment. Also the part where you're talking about just getting more exposed to different like P&Ls, like systems, just understanding the cash flow of other companies. You can really like dial in your own. And that piece of it is, I think, really important too, but something that I relate to when running a software company and a management company in the same space. It's like when I'm in a software company, I have people coming to me all day saying, hey, I have this one set up. It's like this, and I use this for that and this for that. And it's like, here's the way that I do it. And I'm able to now say like, how about we look at you doing it this way? It's going to make it way easier. But then every once in a while, I look at somebody's operations and I'm like, whoa, that's really smart and saving a ton of money and it seems really efficient. So like I'm learning all these new things. I feel like I know all the new tools and technology. So that's been really cool. And that's the main reason why I feel like I kept the management company on the side, just because like, we are at such an advantage compared to anyone else who isn't as like ingrained in the industry.
Sure.
Because we're hearing so many things, like we're not missing anything. Like if little changes that happen in our markets, I'm involved in that too. Like we understand what things are happening. So all of that comes together and just allows you to be a much more effective host. Like,
your feedback loop is so short because you're using it, you're using the tool within your company. That's the same. I feel like the same thing with arbitrages or with your own properties. We were investing in our own in arbitrage. And so our livelihood is dependent upon us doing a good job managing and doing the best job we possibly can of managing and making sure guests have great stays. We're personally invested in it. So that really helps us when we go to get management clients or when we go to grow, because, I just tell them, hey, I'm a client of our own company. I get owner statements just like you would. I see exactly how everything looks. I see how it comes through. We attach all the PDFs. You can see exactly what we spent on different items that we're charging you for. And that's how I want, that's how I want to see it. And if we see an issue, we see immediately. There's the feedback loop is immediate because our livelihood depends on it as well.
Right.
So yeah, I'm totally understand where you're coming from.
Yeah, for sure.
But I think this also goes into like the power of community and how much we've learned from you guys. You guys have learned from us. We have the Meetup group where we're all sharing ideas every month, and we have a mastermind groups that we're in. Those things have accelerated our ability to grow and scale more than anything else, because whatever problem we come up against in the business, we bring it to those communities and we get 5 answers, right? And everyone does things a little bit differently. And then we get to look at those 5 answers and say, we like that one, let's go with that. But the feedback loop and the ability to solve problems is so much faster because we're in communities and sharing ideas with others.
Is that what motivated you to start your own like meetup group? And I mean, you're the leader of our, like there's the WhatsApp group that you have where like it's nationwide operators that I'm not super active in, but I read it all the time. And it's like, you're hosting weekly meetings, bringing in valuable speakers that are going to provide things to these people. Like is that, do you feel like you're reciprocating the value that you're getting out of the group? Like
100%.
vice versa?
Yeah, 100%. I feel like it's cool because, with these groups we've created, they've just organically grown because all of us are trying to help, learn and share ideas to grow faster. And the speed at which we're growing and sharing, we're all just, it's accelerating our growth that much faster. The cool thing is when I have these weekly calls, right, that I'm hosting, I get to ask any questions I want. Same with these podcasts, right? Where you get to ask, it's like I get to ask any questions that I want that, that I can learn about their experience and what they had and then take that for my business. And then by asking those questions, it helps all the other people out. They're asking more questions that I'm learning from. So my biggest thing is I want to learn as fast as I can, as much and as fast as I can. And that accelerates that. And equally, I love helping other people out. Ever since I started in real estate, I was going to meetups. I remember being the guy shy at the back of the room, but no properties, didn't have a business, was working W-2, just curious, right? And these older people who I felt like just had totally made it, right? They were just crushing it in life, would come and be really nice, helpful, share anything that they could to help me out. And, I would share so much advice with no expectation in return. And it was the best feeling in the world, and it really helped me out. So this is my way of paying that forward, giving back. I love teaching. I love coaching. It gets me really excited. I get a lot of energy from it. So those are the 2 main reasons why.
Yeah, that's so cool. I think if I was going to go back and do something a little bit differently, when I first started, I probably would have tried to get a little more involved. And I always say that just because like, I think it took me a long time to like feel comfortable going out, and it was kind of the mindset of like, I felt like I did so much work to learn what I learned. And I was like, I don't want to give this away to people. Like people look at our business like, wow, how are they doing what they're doing? And it's like the secrets to the success where I didn't want to give it away, but I didn't have all the secrets. I thought I did. But the market changes. And when you're not connected and you fall behind a little bit, it's easy to, forget that there's other people that are doing better than you. So,
yeah. Well, I think when you realize that there's 18,000 vacation rentals just in San Diego County, right? There's so much opportunity out there that if we're helping each other out and you get up to 100 and we get up to 100 or, 50 or 100, right? It's like, there's so much opportunity out there that we all just kind of grow together. And the more we share, the faster we grow and the faster we reach our goals. It's a win-win all the way around. Yeah.
What do you think about the new proposed tax that's going to be added to, well, not going to be added, but they're considering, the planning committee at San Diego is considering adding a $5,000 per bedroom tax to every short-term rental operator. And that's not just for short-term rental, I think it's for second homes too, which is wild. What are your thoughts on?
Man, I just heard about it yesterday. So I'm still getting the information coming in. I know they had the meeting yesterday on it. Obviously, being in the industry and having this business is very concerning, because what it will do is it will make it unfeasible for a lot of our owners to continue. Just to clarify, is it a one-time tax or is it
supposed to be yearly?
Yearly, annual.
Yeah.
So for a 4-bedroom, it'd be 20,000.
Yeah.
Yeah. I mean, what it will do is it will, it's simple supply and demand, right? Simple economics, that it will shrink the pool of people that it will make sense financially to even use this strategy significantly. And, just looking at it outside of my lens, like what are the pros and cons of that? The pros to certain people that don't like vacation rentals is that there will be a lot less of them, right? And I think that's really what they're trying to go for. Now, they will open up some housing, right? So if you think about that, there's about 6,000 vacation rentals that are registered at the city of San Diego. They already put a cap on it at 1%. We haven't even reached the cap.
Yeah.
They thought there were a lot more rentals than there were. They thought there was going to be a huge benefit to new housing coming in. And they significantly overestimated how many rentals there were. Now that, now that everyone's permitted and everyone's kind of in an official place, I think they're coming back around and saying, oh, well, it still didn't remove the rentals that I hoped it would. So now they're coming back with alternative options here. It will open up some housing for long-term rentals. Affordable is a really subjective term. San Diego doesn't seem to be affordable for a lot of people. So I'm not sure technically what the number is that qualifies there. What's frustrating is that you're taking rights away. You're taking rights away from people that bought property with an expectation, and the rules were set and permits were set. And that strategy is the only way that they can maintain. Now, San Diego's economy really relies on vacationers coming to town.
Yeah.
Right. So you're going to shrink the ability for vacationers to come here. That's going to hurt restaurants. That's going to hurt the homeowners that have that. That's going to take a ton of tax revenue away. I think they're expecting this to increase tax revenue when in reality, it's going to tank the amount of revenue. It's going to drop significantly the amount of revenue that's coming from transient occupancy taxes and permit fees, because people are just going to drop out.
Sure.
So where they think that, the proposal says, oh, we're going to make a lot more money for the city. I don't think that's the case at all. I think they're actually going to drop us millions of dollars, a lot of revenue, tax revenue to the city. But I think the people that are pushing this don't care about that. They really just want the rentals to be, shrunk down quite a bit.
Yeah. And I think there's definitely there might be some lobbying around it from the hotels and the industries, the tourism industry that has not got as much attention in the past few years with the success of short-term rentals. So that worries me as well. It's just the money behind it that's being pushed to the city. So, the intentions are a little bit shady, and I don't love it. But
yeah, we'll definitely have to. That's the nice thing about having the meetup in the group is that we can bring it, and we have groups of people that we can start to organize a little bit and push back if there is a big hotel lobby, which San Diego hotels are going up like crazy. There's a major financial incentive for Marriott, Hilton, and some of these other hotel brands to close out vacation rentals locally in San Diego as much as they can, because it will increase their margins quite a bit. So, yeah, I think depending on where this thing goes, we might have to consolidate the local operators and see what we can do to have our voice heard.
Yeah, I know there's a lot of people yesterday that spoke at the meeting, so I'm really happy that there was a lot of voices there. I think there was like probably 75 to 100 hosts, property managers, operators there to voice their concerns. And I know that there's one council member that's like very much against the push to add additional tax. So we'll see what happens there. I think we just have to continue speaking about it.
Yeah, it'd be a bit of a death sentence for a lot of operators in San Diego.
Is it time to invest in a boutique hotel? Is that the next?
Well, I mean, there's no doubt. Like, if you think about, we've looked at it ourselves, similar, complementary to what we're doing already. The thing about the hotels is that they're zoned so that nobody can ever take the right away, to operate. And so I think that's really attractive. If there's a market and if San Diego passes this rule, then yeah, I mean, I would try to look for a hotel here as soon as I could, because I know the revenues are about to go up.
Yeah.
Simple supply and demand, right?
Yeah. Yeah. I think that permitting, like, I've just heard that's a little bit of a constraint about, when you do invest in a property and turn into a hotel, it's not initially zoned. It takes a lot of time to get it there.
Not easy.
So we've discussed that with some of our owners that we work with, because we do a lot of multifamily, like commercial, bigger residential buildings. And they've considered, like, we've had discussions with them about, like, should we keep this as a short-term rental? It would be beneficial to turn it into a hotel.
Sure.
Like, I think it all depends on, like, what you're assuming is, like, the long-term outcome of, like, some of the jurisdictional things that are going on.
Sure.
Related things. So it depends, but for now we settled on just keeping it as a short-term rental. The thing is, like, you can always, if you do convert to a hotel, like, you can always put it on Airbnb, put it on whatever, like, have your own website, but it's basically the same exact thing. And with a short-term rental, you can still brand it and manage it the same way as a hotel. I mean, there's different requirements for when you do have a hotel, but for us, like, we're already managing 16 units in one building.
Yeah.
So we're required to have an on-site manager already. So it's basically like there's like a hotel concierge there. Like, it's set up that way already. And so I don't think that the discussion around that is just kind of interesting, because you never know. I haven't heard anybody who's done the full conversion and like charting and stuff, but I imagine if we start seeing things trend that way of higher taxes on short-term rental operators, that might be a good play.
Yeah, I don't know if the city, I don't know how difficult it would be to change the zoning from multifamily, long-term multifamily to a hotel. I don't see too much of that happening. So I assume that it's not easy and that it is difficult. It seems like the hotels are building new as opposed to converting residential. But yeah, it's a good question. If you were able to convert, you may be able to create a good amount of, really good income there, or increase in value.
Yeah. What do you like about staying at an Airbnb versus a hotel? Like, when you're traveling, it seems like you've mentioned, like, you like to stay as a guest and experience that whole thing. Like, why do you choose to find short-term rental versus hotels?
You'll understand this very soon, come May next year. But when you have a family, now that we have a daughter, and it's like it's such a no-brainer, right? As opposed to, let's say I have a family of 4 or 5, as opposed to needing to cram everyone into one hotel room, or split them up between multiple hotel rooms. You got kids running up and down the hall, right? You have you're separated from them, so now they can be out the hallway running somewhere up and down you don't know about. You don't have a kitchen. You have one little bathroom. Do you have cribs, high chairs? Do you have a tub? So when you think about group travel, I think that's the biggest thing for me. If you're just a couple, great. Airbnb, hotel, similar. Of course, you should get the kitchen. You get like a living, like a common space, seating area. So I think it's almost more homey, like you're still at home, than a hotel would be, which is kind of just small room blocks. Now, hotels are trying to move into that. You're seeing hotels or boutique hotels closer towards mini apartments, and you're seeing Airbnbs there's the gap is being filled in between. But I'm telling you, especially for groups of families coming together, where you have, like, for instance, we were just up in LA last night for one night with family. My cousin and her family of four, they were in the one room. We were in the other room with our 1.5-year-old daughter, and the grandmother was in the other room, right? And we all got to hang out in the common area and kind of stage before we went out. There's a dining table. You can actually have meals and have family situations. So weddings, funerals, graduations, all those things bring families together. And it's so fun to be in one location and house.
Yeah, I would say I get excited about the same things. We do an away Chicago Bears game every year with all my family members. So they live in Chicago, and most of them live in Chicago. A lot of them have kind of moved out since then, but we're some of the only ones in the family who live in California. And so we'll fly out, and what we all do like one central location. So this year we're going to Cincinnati. We've hit a lot of the more popular cities recently. Like we went to New York, we went to Vegas, we went to LA. And so now it's like, all right, I guess we have to do some of the Midwest cities that like not everyone wants to travel to. My family's from the Midwest, so I can say that. But
Yeah.
I say that because we found an Airbnb that holds 16 people, and we find one every year. And it's like the coolest thing. Like last year we stayed in LA, we did a Bears Chargers game, and stayed in like what they said used to be Machine Gun Kelly's old mansion.
No
which
way.
was really cool. But it was sweet, and it had like a big pool and like multiple levels and bars and all that stuff. So it's freaking sweet. I mean, that's like something that you obviously don't get at a hotel.
Yeah. I mean, amenities, and they're private too, right? Like if you go to a hotel, you got a shared pool, shared hot tub, shared gym. Like in an Airbnb, you get the pool to yourself. Get the hot tub to yourself. You can get that sauna to yourself. You get the workout room to yourself. There's so many different amenities, and people can be really creative with how everything looks and design the amenities that come along with it. I'm with you. For New Year's this year, my whole family's gonna get together. We got a big one out in Salt Lake City in Utah, and we're gonna go skiing out there. And we'll have 3 generations. So my parents, us, six kids with the significant others, right? 3, and then the other 3. And then 2 babies.
Wow.
And the babies will have their rooms, and we'll have our beds, so everyone's got room. That'll be the home base, and then we'll go on adventure from there.
That's awesome.
That's really where it doesn't even compare to a hotel.
Yeah, that's the stuff that I get excited for. And I think that's more of like the travel that you and I are used to doing. But there's also advantages to, like, I think just because of the way that cities are planned and laid out.
Yep.
And the zoning being like Vegas, for example, like the middle of Vegas, like the city, the strip, there's no Airbnbs, no short-term rentals around there because it's just hotels. Like you literally can't have an Airbnb in that area. So like if you're there and you want to be in like direct walking distance to specific things for certain cities, I think that's an advantage that you see.
Yep, for sure.
Plus like having the gym in the building, even though it's shared, you probably don't have a gym in your Airbnb unless you have a nice one, back one or whatever. So there's like those little things. And I think if you're traveling by yourself for the convenience of it and not having to like rent a car, get Uber, anything like that, and you can walk to everything, if it's in a city that is laid out that way, I can see a lot of benefits there. And I think it's really funny how like you see the different like Airbnb and Vrbo commercials. I crack up every time I see them. And now we're getting like commercials for guesty and hospitable and stuff. I don't know what it is. It's probably mostly targeted because of all the stuff that I search and work on my computer. But it is so funny just the way that like Airbnb started kind of pushing their experiences, and they're like stay with the owner and like have them show you this crazy experience, which is cool. I haven't done that before. And then Vrbo directly rebuttal with their commercials about like you show up to the Airbnb and the owner's there with you, and like they're like BRBO
in their towel in their bath towel.
Yeah, and they're just they're like in the hot tub with the guy.
Yeah, right.
Yeah,
soaking in the tub.
So funny, which isn't entirely. I mean, like you should just read the description before you book anything.
Of course,
on Airbnb or Vrbo, because you never know. But like, I just get a crack up about that stuff.
It is funny how they're trying to like get their different niches. And I mean, the more they market, the better. Yeah, the more they market, the better for us. I'm totally fine with them marketing. I laugh at it the same way.
Yeah, and we get hotel commercials too. It's just...
I mean, we stay at hotels certain times. We stay at Airbnb certain times. I love them both. I think they both have a great place. And I want them both to stay around. Right. Another nice thing about Airbnb is that you're a lot of times you're in a house in a neighborhood, so you get a chance to feel like, hey, what's it like to live here? I'm walking distance from this really nice park that I can take the kids and the dog to. dog friendly. That's another one. Hey, I got a backyard. I have a backyard that's fenced in. We got the fire pit on back. All the kids can play. The dogs out here. It's just way more like it would be at your house.
Yeah.
So I love that too.
Yeah, I think I have a story that could probably like be in the Airbnb commercial. We literally showed up to Vegas. We were driving from Minnesota to San Diego a couple of years ago. It's a long road trip.
Yep.
But we had to stop in Vegas because it was like going to be super late at night. We didn't have the time, and we either had energy to make it the 5 hours back from Vegas to San Diego. So we're like, let's just stay at this hotel. I booked it while we were in the car.
Yep.
And so I booked at the Rio, Las Vegas. I'm fine saying the name because I'm still annoyed at this situation. And it's dog friendly. So we're like, this is awesome. Like, we show up, and so I checked in online, and so it was like, you're good to go. Like, when you show up, we'll hand you the keys to your room and you're good to go. There's a self check-in kiosk, or you can wait in line. So I'm like, this is perfect. So we show up. Parking was kind of a mess, but I hopped out, wanted to see if I could get the keys to our room, and we could like figure that out there. And I logged in, I like checked in on the kiosk, and it told us that the room wasn't ready, and it was like 8 p.m. I'm like, I booked it for a 3 p.m. check-in. Like, how are you gonna say it's not ready? It's 8 p.m. So then I'm like trying to talk to somebody. I wait in line, and I finally talk to somebody at the desk, and they're like, yeah, we're just not sure like when it's gonna be ready. Like, it might take like 30 minutes to like maybe 2 hours max. And I'm like, it's 8 p.m. and like, we're so tired. Like, what do you mean? So
turn over a room. It's one room.
Yeah. I was like,
how does it take 2 hours?
It was super frustrating. And there was a bunch of people there waiting in line, also frustrated. So I was like, you know what? We're going on Airbnb. I found a room or just like this, like apartment that was in a duplex. The owner lived in the other one, which was totally fine. We just needed a place to stay.
Yep.
It was super cheap. Last minute, they had instant book on. They had scheduled messages that gave us all the check-in information. Yep. So we booked it, drove 15 minutes, got there, slept, had a great night's sleep. Nice. They allowed dogs, which is like great. Yep. We ended up seeing the owner the next day, and they were like, "Oh, hey, you guys are the ones that booked last night." And we're like, "Yeah, like it's super last minute. The hotel wouldn't let us get in a room." Yeah. So it's just a crazy experience where I'm like, I literally instant booked a room for like $70. Yep. And they allowed my dog. They had all these, like, it was awesome. They had this garden of like, we could go pick fresh vegetables in the morning. Like, it was this whole experience.
Wow.
But like, that's not what we were gotten at that hotel. The hotel was more expensive. It took me months to get a refund on that too. So
wow. Yeah, I mean, that's the cool thing too, is I think that's part of the reason why I like it. If you're staying at an Airbnb, most likely you're helping a person or a family pay the bills, right? And, you know, maybe it's their vacation home, second home, whatever, but still it's a family, right, that you can interact with. If you're going to a hotel, you're giving them money, you're either helping out a much bigger corporation or a big investor, right? I mean, sure, I might love to get into hotels at some point. That's great. But like if you're staying at an Airbnb, it's usually a small, like a family or something that you're helping out. And that's why $70, and it goes a long way. Yeah. You know, it goes a long way towards paying your bills. And especially with inflation the way it is, it's one of the, I mean, how else does our generation expect to get ahead or be able to buy property when the values have gone up so much, unless you're renting out in some way a portion of it? So I think, unfortunately, that's with the regulation. That's what they're missing, is that it's unaffordable to buy a place in San Diego, unless you're being creative or doing some kind of a strategy to rent it out or house hack it. Yeah, it's the only way that you can really do it. So just another thought there. My first Airbnb that we stayed at was the pool house at a place in Nashville, and it was amazing. It was like an open concept pool house. It was in the back. The pool was there. It was saltwater pool. It was warm. My buddy and I stayed there. The owners, he was a songwriter, and he had written some really famous country songs there in Nashville. We got to, you know, they were like, hey, you guys can hang out in the basement. We had a pool table. They had the Xbox down there with games. We had the pool. So it was just such a cool experience. We were able to play with the dog of the owner. We got to hang out with the dog. So the interaction there was so fun. And I was like, this is such a cool concept. I love this.
Yeah, and as I get older, I appreciate those experiences a lot more. Like when I first started using Airbnb, I think I was probably like 18 or 19, and like it was more so like I just want a private place to stay with my girlfriend or with my family or whatever it is, my friends, probably just to go out and like have a weekend somewhere, and like I just don't want to like talk to anybody. But now it's like, you know, there's so many cool experiences that I've had just over the years of staying at Airbnbs, and I know that like I want to support that community as well. So
Yeah,
yeah,
I agree.
cool, man. Well, yeah, I do have one final question.
Sure, what you
I'm
got?
curious, for the people listening that are like, whoa, 80 units is crazy. Like your story is really inspiring. How would you recommend starting in short-term rental business if you had to go from scratch in 2025 today?
Yeah, I mean, you have to start with the first one. That's the toughest one. And if you're coming in with no experience, it's hard to sell somebody on paying you to do it. So I think that whatever it takes to get in and help somebody and do, even if it's for free, like that's the key. Is you need the experience first before you can go and build a business. You need to get the experience. So whether it's a family member who has a rental or a friend who has a rental, or go to a meetup. If you don't know family or friends that have rentals, go to a meetup, meet somebody who has one and say, hey, I would love to get into this. I'm willing to help you out with it however I can. If you're able to add me as a co-host, I won't charge you anything. I just want to see how the flow works and how everything happens, how you deal with situations that come up. And then I'll be a backup for you. If, maybe I could jump in to help you solve some problems once I get running. So offering your help for free to get the experience or for a low amount will then give you the ability to understand how you can go and help somebody else out. So the first ones we did, we were doing them ourselves, but then the first management contracts we got were at like 10%, which is half the market rate. So we're hardly making any profit there. We were paying software and expenses, but those at 10% led to the ones at 15%, and those at 15% led to the ones at 20%. And now we're closing some at 25%. And those condos led to 2 bedrooms, which led to 4 bedrooms, which now we have some oceanfront luxury mansion homes, villas, whatever you want to call them, overlooking the ocean with 6, 7 bedrooms that do way more. So everything is a step up. And I think some people, you don't want to get into the trick of, hey, I need to be at market rate for everything right off the bat, or I'm underselling myself. Mm-hmm. No, you should do whatever it takes to get the experience, because you're not going to be good when you start. You're going to make the mistakes. You're not going to be at the quality level that the other companies are. So do whatever it takes to get the first few. Do the absolute best you can to go over the top of those first few to get referenceable clients that are really happy with you and will vouch for you. And then go out and start doing some marketing and cold outreach and calling realtors or whatever it is. When those leads come in, you say, oh, hey, you can talk to this person, this person, this person, and they'll vouch for me. That makes it so much easier to grow. But you got to get those first success stories in, whatever it takes, free, 5%, break even, whatever it is.
Yeah, I think that's really good advice. Focusing on the quality always. I think that's like the theme that I hear from so many successful operators that comment on the podcast. This is who I talk to. It's like, you learned initially, you contributed, and you took your time, you made your mistakes, but you just focus on the quality, and that's always gonna help. Because you focus on the quality, you're delivering a quality product to your clients. They're gonna want to refer you, and that just snowballs from there. So,
like I said, when you start, you're gonna make mistakes with double bookings or with missing cleanings or the automations that you're able to
forgetting to put the clean field. Yeah, that's
right. Same, right? Forgetting about the taxes. Oh man, I got to collect the taxes. There's all these little things that go into it. But where you have an advantage as someone is someone just on your own is that you're the one directly communicating with the owner. You're directly communicating with the guests. You're learning a ton, and you can make up for the mistakes by being really hospitable, really personable, calling the guest right away when there's an issue, showing up when there's an issue, and like going above and beyond to make it work. That's where you have an advantage over the bigger companies who are a little bit more automated, right? You can be more personalized. So I wouldn't be intimidated at all by the bigger players out there. You have a significant benefit that you can bring. And the owners like to know that it's me and you, like I'm talking directly to you and I know exactly who to go to as opposed to a bigger company.
Yeah.
So yeah.
100%. And you're not going to get rich overnight either. That's like, I think people, the just world of social media makes you think that you can just like hop over with your job and it's like super easy and everything's laid out for you. And you got to put in a lot of work. Hospitality is a hard game.
I would say any business is the same way, right? I think there's so many people that say, oh, get rich quick. Maybe they got lucky. Maybe there are some scenarios or they did something out of the norm. But 99% of businesses are going to be a slow grind that just kind of stays steady with a couple wins and losses. And then you kind of, and then you have a breakthrough and all of a sudden you're off and running. Every single business is going to have that point where you are really optimistic at the start. Hey, this is going to be great. I'm jumping in. I'm excited for this. It looks like a lot of fun. And then the more you learn about all the downside or the repetitive or the compliance and all the stuff you have to do to run a business properly, you can start to get discouraged and say, man, this is a ton of work. I'm burnt out. I'm doing the same thing day in and day out. I don't know if this is the business for me. What I would say is you got to resist the urge to jump to the next shiny object as much as you can and just stick through it, because when you do the boring stuff over and over and over and figure out how to automate it or offload it to other people who are more passionate about it, that's when you start to get to that point where you can take off and grow a business with staff that grows by itself and runs by itself. And that's really where you get to the freedom that you're looking for. Every business, you have to go through that process, though. There's no shortcut around it. We're just now, after 6 years, getting to the point where we have full-time staff is growing the business and operating it. And we have a business that's, scalable, sellable, whatever it is, right? Depending on what our goals are. So yeah, we probably could have sped that up if we quit our jobs earlier. We were doing it part-time for 3 years first. But yeah, so in the big scheme of things, get rich quick. I mean, those schemes, right? Think about it. In 6 years, we've been able to create something really amazing that's kind of life-changing for us, right? That to me is pretty fast, right? But if you're trying to do it within a year, I think that's the wrong expectation.
Yeah.
If you think about what you can do in a year, you're not going to get there. If you think about what you can do in 5 years, you can get really far if you just stay consistent.
Yeah. I forget about like how far we've come to in our business. And it's nice to look back on it every once in a while and just be like, wow, like I would have like, just the amount of work that I put in to have the knowledge that I do today is something that I didn't know if I could do when I started. So I think beginning with the end in mind is always important, but staying flexible because things change, people and to change your business strategy. But something that always helped me was just focusing on the short-term goals, because it could feel really overwhelming if like I'm at 0, I didn't get to 100. Just, figure out the things like you said, like figure out the things that you could delegate and while keeping the quality. That's like the most important part. Don't delegate or don't automate if it's not going to maintain your quality, or else it's just going to you're slowly going to lose your margin as you scale. You're going to be at 20 properties, 30 properties, and every 10 properties, you're going to go down 0.1 stars on Airbnb. And then sooner or later, you're going to have 4.3 stars in one of those shitty large property management companies. That's just how it happens. But for us, that are aiming to be a large property manager and a successful one and still feel like you have that face-to-face, strong hospitality connection with your guests and your clients, can't sacrifice the quality when you're building like that. So yeah.
And that and when you scale, that comes from hiring really great staff that has that same hospitable mindset about I want to make sure every guest is having a good experience. And if they're not, I want to do whatever I can to try to turn it around, make it up to them, get them at a different place if needed for, if there's some major issue, things come up, right? You have to have a way to triage that and make sure that the guests is first, because that's what drives the business.
Yeah. Getting people on your team that are just totally bought into the vision. Like you mentioned earlier too, that's an effect that I didn't think I was going to have on another family, supporting somebody else to allow them to make a living, and multiple families at this point. It's even the virtual team that we have, seeing them go and buy their own properties and travel and enjoy time with their family. It's just so cool to see. And you don't really need a huge operation to do that for somebody who's not in the US. That's one of the craziest things for us. We hired our first virtual assistant in 2021, or 2022. And it was a little over a year after we started our business. And shortly after that, we've given her raises each year because she's doing better. She's learning with us. She's taking on more responsibility. And it just feels really good to support somebody like that.
Yeah.
And she's completely she will stay after hours to fix things for us, or do extra work. And it's just so cool to see that.
When you created a win-win scenario with her, right? I think that's the beauty of it. She is so grateful to be able to work. I mean, our team, so grateful to be able to work from home, not have to commute to multiple hours a day, kind of they work with each other's schedule, but they get to kind of, take care of the schedule. They don't need to be, they can go to the doctor during, like, they have a lot of flexibility more than that you would if you were in an office, for sure. Even in the US, right? They have more flexibility than that. They work virtually, they have families. So yeah, we're up to 10. We're supporting 10 families now between the 5 BAs and the 5 here.
Yeah.
And it's a really humbling thing to be a part of, that you're saying, wow, this thing we created out of nothing is supporting so many people and supporting all these guests to make really fun memories with their families as they're staying.
Yeah.
It's a really cool thing to watch it grow and be a part of it and to help create that.
Yeah.
And then I think the last thing I'll say is, for like somebody who's looking to jump in to any business, you really have to learn to love the process, because what, you say, oh, this is the goal I want to get, I want to get to this scale, or pay myself this much, or, sell my company for this much. It's like that happens. And then all of a sudden you're like, okay, great. But the learning along the way, the learning that you get along the way of being an entrepreneur, and how much you're forced to learn and how many hurdles you're overcoming. If you're just like, that's what gets me excited. Every day I wake up and I'm like, cool, I can go and choose what I want to improve today.
Yeah.
And every day we try to improve in sales and marketing a little bit. Every day we try to improve in operations a little bit, and in finance a little bit. And I'm learning all these different things I never knew about, HR, and some of it's boring and frustrating, and some of it's really fun. But I enjoy the process of trying to make things a little bit better every single day. And then over 5-10 years, all of a sudden you have one of the best companies in the city. That's a really cool feeling.
Yeah, it's so fulfilling too. And that's a feeling that I was lacking at my W-2 job, I think, is like, I didn't feel like I had the influence that I had the potential of giving. So when you're in that position and one day you wake up and it's like, you open your Slack organization and there's like 20 people working together, like, that's so freaking cool to me. And like, autonomously, like, everyone's managing their own little things, and it's just like, wow, we got to this point. So
it's cool too, because we've implemented, all these like bonuses, right? So quality bonuses. And so they're now in control of making extra income. We implemented this taco bonus system, where I actually got that from doing an interview, right? That's where the idea came from. But now the team, when somebody goes above and beyond to help somebody else, they can give them some tacos, right? Oh, a taco or 2 tacos for this person. And it's a way for each team member to recognize when somebody's going above and beyond, picking up a shift, had an emergency. And it's a way for all of them to show appreciation for each other. And there's a little, monetary bonus tied to it when they get to a certain amount of tacos. But it's more so about recognition. And it's really cool to see them all helping each other out. And like, we're giving tacos, they're giving, everyone's helping each other out. It creates a fun culture to be a part of it, to create.
I love that. That's such a San Diego thing.
Yeah, right? I should say fish tacos, because that's San Diego, right?
That's amazing. Well, yeah. Thank you, Matt, for being on. I know that you have a lot of different things that you're involved in right now, but is there anywhere that somebody can find you if they're looking to connect or learn more about what you're doing?
Yeah, man, of course. You can find us at Stay Classy Airbnb guys on Instagram. We're posting, updates of the properties on the mastermind group and all those kind of things there. And then you can, reach out to me directly, Matt at stayclassyhomes.com. If you have any questions, happy to help out however I can.
Nice. Awesome. And you run a mastermind too?
It's part of the WhatsApp group, and then we do those weekly calls. So
okay, cool.
Yeah, so we're kind of coaching and teaching, and we're all sharing ideas on how to grow and scale companies. Got some people that are up 1, 2, 5, all the way up to 250, 300 units, which is pretty cool.
Yeah. And I want to thank you too for just providing all of that, because it's all free stuff for me. And now I get to get the benefits of that too. So you're starting your own podcast soon. I'm sure you'll be announcing that, and those who follow you will see that as well. I think it's definitely well suited for you and your journey. So
thanks, brother.
Appreciate you being on.
Thanks for having me, Jay.
Thanks, man.